This is Nightly Business Report with Sue Herrera and Bill Griffin.
Nike trips. The stock has been on a run, but disappointing sales growth in North America now has investors running the other way.
Biogen breakdown. The company sheds $18 billion in market value after its once promising Alzheimer's drug ends in failure.
Poor performance. Crash tests of some popular pickup trucks are raising new safety questions. We have those stories and much more tonight on Nightly Business Report for Thursday, March the 21st.
Good evening, everyone, and welcome. Wall Street was in rally mode. Stocks reached a 5-month high today, with the Dow gaining more than 200 points, led by the technology sector. Investors were willing to take on more risk following the Federal Reserve's decision yesterday to keep rates steady this year, something we told you about last night. And that resulted in a 216-point gain for the Dow Jones Industrial Average to 25,962. The Nasdaq rose 109 points, and the S&P 500 added 30.
And Nike could help determine the direction of the stock market tomorrow. Late today, the Dow component reported better than expected earnings and an expansion in gross margins. Here are the numbers we got this evening. The company earned 68 cents when the street was looking for about 65 cents a share. Revenue was just about in line with expectations, more than $9.5 billion. Now, those sales were strong. Nike results in North America were not as solid as many had hoped, and that caught investors off guard this evening. The stock fell in initial after-hours trading. Sarah Eisen has more on Nike's numbers.
The takeaway from Nike's beat: this is a company in the middle of an upswing in innovation and solid growth, but the market is already onto it. Nike posting very strong sales across geographies, from North America to Europe to China, despite some warnings and evidence of an economic slowdown in different parts of the world. Why? Innovation is key, and you see that in higher margins. Nike is able to charge more for newer products like the Epic React and the Vapor Max that are resonating with consumers right now. The only challenge: Wall Street is already onto the story. The stock has run up 20% to a record high. It's rebounded strongly off the lows, leaving some investors to wonder what's next. For Nightly Business Report, I'm Sarah Eisen.
Biogen shares had their worst day in more than a decade. This after the biotech company said it was stopping 2 phase 3 clinical trials of an Alzheimer's treatment. The drug had been considered one of the most promising in the fight against the memory-destroying disease. The company says the decision to halt the trials was not due to safety concerns, but instead because analysis showed the trials were unlikely to meet their primary goals. That sent the stock down 29%.
So what will this setback mean for Biogen and other companies in the biotech sector? Joining us tonight, Michael Yee is an equity analyst at Jefferies, and he joins us to talk more about this. Good to see you again. Welcome back, Michael.
Thank you.
I mean, there were a lot of high expectations for this treatment of Alzheimer's as it went through the various stages. How big a setback is this for Biogen to see it fail?
Yeah, thanks. Well, certainly from a practical standpoint, we're obviously disappointed, and it's a big disappointment for patients. But for Biogen specifically, this was the most important pipeline drug. Could have been a drug that was $10 to $15 billion of sales, could double the company's revenue and earnings. And so this is a big setback for the company, and I think they're going to have to take some time to regroup and reevaluate the pipeline and probably go out and do some more acquisitions.
I was just going to say, you think that they do have to make some acquisitions. What sector of biotech do they look for or look in, and what companies do you think might be a good fit?
It's a great question. I think that what they are likely to go out and do is still focus on broad areas of neurology. Companies like Sage or Marinus. Sage obviously just had a depression drug approved this week, which could be a big program. And in gene therapy, they did a gene therapy acquisition last month. Gene therapy has a lot of promise, and there's a lot of great drugs in the pipeline from, like, Sarepta is one example. And so I think that's where they're going to be focused over the next year or so.
And what now for Alzheimer's? There had been a lot of hope in the last few years that we'd been figuring this thing out and maybe coming up with some effective treatments. But now what?
Yeah, no, you're right. This was the most promising drug in development. They had really shown a lot of data over the past couple of years that led us to be optimistic. And I think that where this takes us back is a view that are there different targets within Alzheimer's to go after? Are there different genetic elements of it? Are they looking at the right patient population? So I think this is a big setback for people. I think that the company is going to have to reassess the pipeline, and I think this is a big disappointment for those in the Alzheimer's space.
Picking up on Bill's point, though, are there other companies that are being aggressive in the Alzheimer's space, or was Biogen really the only one or the leader?
No, the Biogen certainly was the leader from the standpoint of they have the most late-stage asset with the most promising data, with the most numbers of patients. There are other companies that have drugs that are earlier in development, whether that be a Denali or an Elector, which have some very early science in phase 1 that people are optimistic about. But ultimately, this was one of the big ones, and again, a big setback today because there was a lot of potential.
Indeed. Well, let's hope somebody else can come along with something there. Michael Yee with Jefferies again.
Yes.
Thanks for joining us tonight.
Thank you for being here.
New developments tonight related to Boeing. The company plans to slow production at its 737 factory. Boeing says it continues to build the 737 at a monthly rate of 52, but will use 3 buffer days next week to catch up on work delayed by recent storms and supplier issues.
To the economy now, and a new survey of economic conditions which rose in February for the first time in 5 months. It's the index of leading economic indicators. They were up 0.2%, led by higher stock prices, lower interest rates, and improved access to credit. Economists say it could be a sign that growth will pick up after a slow start to this year.
Those lower interest rates are good news for home buyers. Mortgage rates are down just as the spring selling season heats up. Diana Olick has more.
Mortgage rates are now at the lowest level in more than a year. This after the Federal Reserve chairman yesterday said there would be no more rate hikes this year and that the central bank would start buying bonds again. Mortgage rates loosely follow the yield on the 10-year Treasury. So we've now gone from just over 5% on the 30-year fixed in November to 4.34% today. That according to Mortgage News Daily. To put that in perspective, if you're a home buyer taking out a $300,000 mortgage, you're now paying about $150 a month less than you would have in November. The question now is, will that be enough to juice home buying this spring? Enough to make up for the high home prices we're still seeing? Home sales dropped off last year as rates rose, and while affordability has now improved slightly, first-time buyers are still struggling to get into this pricey market. For Nightly Business Report, I'm Diana Olick.
UK Prime Minister Theresa May arrived in Brussels today for a summit of European Union leaders. Time is certainly of the essence now, since the deadline for the UK to leave the bloc is a week from tomorrow. So the issue on the table today was, of course, the Brexit deal that the UK Parliament has already rejected. Villa Marks is in Brussels for us tonight.
In this city known for its last-minute political compromises, a deal struck almost 200 hours before a deadline could appear premature. But if the EU approves a Brexit delay overnight Thursday in Brussels, it would stem from a failure to find agreement back in London. After intense back-and-forth negotiations that have now lasted 1 year, 11 months and 21 days. Before this last-gasp EU Council meeting, UK Prime Minister Theresa May had requested more time to get her deal through the British legislature. Several European leaders told us they hoped she would manage that next week, third time lucky.
Most of us are ready to give Great Britain another chance, and Prime Minister May another chance to convince her parliament to vote the agreement. There's still time. We still have this possibility.
But as of right now, there's not much time. Just 8 days until Britain legally leaves the EU. And the possibility that lawmakers in Westminster vote through May's deal remains very narrow.
I hope that there will be support in the Parliament next week because we all have the same interest, to avoid a hard Brexit, to avoid a no-deal scenario.
French President Emmanuel Macron has taken a hard-line stance in recent weeks, and he insisted Thursday afternoon that a parliamentary defeat for May could mean the UK crashes out of Europe next Friday.
In case of no vote or no, I mean, directly, it will guide everybody to a no deal, for sure. This is it.
After 2 years of talks, Europe's leaders told us they were still not clear about the will of the UK's voters, lawmakers, or indeed its leader, though they acknowledge she is caught between a rock and a hard place.
We are in a special situation because for the moment we have more no options on the table than options. Your Speaker of the House of Commons telling us that he doesn't want to revote the same text. Jean-Claude Juncker telling us that he doesn't want to renegotiate. So we know what everybody doesn't want, but we still don't know what you want.
For Nightly Business Report, I'm Willem Marks in Brussels, Belgium.
It is time to take a look at some of today's upgrades and downgrades. Apple was upgraded to strong buy from buy at Needham. The analyst cites Apple's new content service and says the company should be viewed more as an ecosystem rather than a product company. The price target is $225. The stock rose more than 3.5% to $195.09. ConocoPhillips was upgraded to overweight from neutral at Piper Jaffray. The analyst cites the potential for free cash flow generation. The price target is $75. The stock rose a fraction to $68.14. Micron Tech was downgraded to sell from neutral at Citi. The analyst cites the company's soft revenue guidance, which was released late yesterday. Today, the CEO says he's focused on growing the profitability of the business.
As long as we focus on our supply growth to be in line with demand, we believe with the portfolio of products, with the technology advancements that we are making, the product portfolio that we keep expanding, we will definitely do well in terms of meeting the requirements of our customers and absolutely maintaining our share in the market as well.
Citi's price target for the stock is $30. Despite the downgrade, the stock rose more than 9% to $43.99.
Still ahead, Wall Street's new power suit.
I'm Robert Frank in New York City. Coming up on Nightly Business Report, did Goldman Sachs just kill the suit? We'll take you inside one of Manhattan's top bespoke suit makers to find out what Wall Street will wear next.
Facebook has admitted to inadvertently exposing the passwords belonging to hundreds of millions of its users. According to reports, the social media company stored about 600 million passwords without encrypting them, meaning they were then viewable as plain text to some company employees. In a blog post, Facebook did not say how many users were affected, but it did say that it would start sending out notifications so users can change their passwords. Most companies do encrypt passwords to prevent them from being stolen in the event of a data breach.
New crash tests are raising questions about the safety of some of America's most popular vehicles, pickup trucks. In fact, a watchdog group says some pickups struggle to protect passengers in the front seat. Phil LeBeau has the details.
The impact of new crash tests from the Insurance Institute for Highway Safety is stunning. Some of the most popular pickup trucks struggle to protect test dummies riding in the front passenger seat.
In general, the pickup truck class of vehicles is not doing as good a job protecting right front passengers as other classes of vehicle.
Of the large pickups tested, the Ford F-150, Ram 1500, and Nissan Titan received the top possible rating of good, one notch above Honda Ridgeline's acceptable grade. By comparison, the IIHS says the Chevy Silverado 1500 and GMC Sierra 1500 provided marginal protection, while the Toyota Tundra got the lowest possible grade of poor. The Insurance Institute believes these tests will prompt automakers to improve the safety of their pickups, especially as Jeep and Ford roll out mid-size pickups to meet the growing demand for trucks, which have gone from being work and utility vehicles to becoming the everyday ride for more Americans.
Pickup trucks have become sort of a vehicle that people treat as people used to treat cars. They're driving them back and forth to school, back and forth to work. So crash protection in these kinds of trucks is more and more important to more and more people.
Last year, pickup sales increased more than 4%, easily outpacing the market overall, something that is expected to happen again in 2019, as America's love affair with the pickup runs hotter than ever. Phil LeBeau, Nightly Business Report, Chicago.
More people are eating out at Olive Garden, and that's where we begin tonight's Market Focus. Promotions and menu upgrades at the casual dining restaurant are paying off, apparently, for parent company Darden Restaurants. Darden today reported better than expected earnings and raised its fiscal year outlook. It also reported strong results at its Longhorn Steakhouse locations as well. Shares rose more than 6.5% today to $116.11. Land's End reported a near 60% decline in profits for the latest quarter, but they still managed to beat Wall Street earnings and revenue estimates. Analysts say that the company's turnaround is starting to pay off, believe it or not. But investors wanted more, obviously. The stock fell 6% to $16.12. And Conagra reported better than expected earnings thanks to higher prices and an increase in sales at its snack unit. Those higher prices helped to offset a rise in transportation and commodity costs. The company also signaled improvement at Pinnacle Foods. That's the company it purchased for more than $8 billion last year. The stock today gained 12% to $25.82.
CVS has started selling cannabis-based products in 8 states. The company specified that the products are topical only. It is not selling any supplements or food additives that contain CBD.
Anecdotally, we've heard from our customers that have used those products that, gee, it's helped with pain relief for arthritis and other ailments. So we're going to walk slowly, but we think that this is something that customers are going to be looking for and is part of the health offering.
The stock gained 2% to $57.40. Clorox is suing rival household products maker Reckitt Benckiser. It alleges that the British company falsely claimed in ads that its Lysol products are superior to those made by Clorox. The stock was up about 1% to $158.06.
Levi Strauss made its return to Wall Street today, marking the largest IPO of an apparel company in years. The iconic American retail brand began trading on the New York Stock Exchange after having priced its initial public offering at $17 a share. That was above the expected range. The company is now eyeing expansion through new stores. And the CEO says Levi Strauss is giving customers and now investors what they want.
To be successful, it does come down to strong brands. Consumers at the end of the day love an emotional attachment with their brand, and we've recreated that, that love for Levi's. We have built a very, very big platform on big data, and we're mining the data that we do collect and really turning it into revenue.
Well, it was an emotional day for those shareholders today. They soared by nearly 32% to $22.41.
And in honor of that IPO, the New York Stock Exchange suspended its dress code for today only. Traders were permitted to wear jeans, which are typically not allowed. The big board's dress code calls for men to wear a jacket and a tie, but today it was Casual Thursday.
And that casual trend is becoming more commonplace in the financial services industry. And it's changing an entire industry that has focused for years on dressing bankers at some of Wall Street's most storied firms. Robert Frank is in Lower Manhattan for us tonight.
The traditional business suit has been going out of style for years, but Goldman Sachs' announcement that it's going casual marks the end of an era for an industry that dressed Wall Street for decades. National suit sales dropping from just under 13 million in 2011 to 11 million last year, and they're expected to fall to 10 million in the next few years. Millennials are driving the trend.
I think it's a great idea that places are relaxing their dress codes. You kind of can express yourself more and who you are with your outfit choices as opposed to wearing slacks and a button down every day.
Wall Street was one of the last holdouts for the suit, and Goldman set the style for much of the street.
We have said for a while, if Goldman goes casual, there's going to be a problem, because Goldman is such a bellwether for the market and is such a trendsetter among other firms. And I think we'll see a lot of the other holdouts begin to very quickly adopt.
The future probably looks a lot like this. We're at Michael Andrews Bespoke in downtown Manhattan. They had dozens of Goldman clients, and their traditional suit sales are down 28% just over the last 3 years. So Andrews is consolidating the industry, buying up New York's oldest suit maker, Cozen & Sons. It's pushing into casual wear like blazers, custom jeans, and leather jackets. And it's focusing on events like weddings, big parties, and even TV and movies.
Oh, nice.
Some say Goldman's announcement could even help the business in the short term, since sport coats will become the new power suit.
We just had a client from Goldman in who had come in to get 2 suits right after the announcement. And he said, well, all right, I still need the suits, but I need 3 new sport coats now, too.
For Nightly Business Report, I'm Robert Frank in downtown Manhattan.
And sticking with retail, shoe retailer 9 West is now emerging from bankruptcy protection with a new name. The company will now be known as Premier Brands Group. 9 West filed for Chapter 11 protection in April of last year and cut its debt by about $1 billion in the process.
Coming up, winter whiplash. Western states got a lot of snow this ski season, but experts say that's the exception, not the rule.
Here's a look at what to watch for tomorrow. We're going to get a fresh read on the housing market with the release of existing home sales. Tiffany's quarterly results will give us a glimpse into the health of the luxury jewelry market. And the latest read on manufacturing will tell us if the sector is being impacted by the slowdown abroad. That's what we're watching for on Friday.
The western part of the United States has seen record snowfall this year, but that hasn't been the trend. Snowfall totals have been moving in the other direction. In fact, experts say ski seasons are already getting shorter due to warmer temperatures. That could have a big financial impact on the properties that profit from snow. Diana Olick is back with the next installment in her series, Rising Risks.
Colorado may be having one of its best ski seasons this year, but all this snow is actually proof of how undependable winter weather is becoming. Because last year's season was one of the worst.
That was the first delayed opening that I've seen since I moved here in 1991.
Josh Lautenberg sells multi-million-dollar homes like this in the Vail area and said even this year's season got off to a slow start.
Because last year stunned people, and I think a lot of people were a little bit gun shy from last year, deposits on hotels and rental properties and everything else.
And the winter sports season is likely to become even less reliable. The amount of snow in the western United States has seen an average drop of 41% since the early 1980s, according to research just published in the journal Geophysical Research Letters. As a result, the snow season shrunk by 34 days. That has a direct effect on the valuable properties all that snow sits on.
As far as the real estate business that I own, and then I also am a broker within, what will happen? You know, where's my livelihood in the future in 3 to 4 or 5 years?
By 2050, home values near ski resorts could drop by at least 15% due to warmer winters, according to a study by researchers at the University of Wisconsin. In lower elevations like Utah, Idaho, Nevada, and parts of California, they could fall as much as 55%. And it's not just the fancy homes. Snow sports tourism contributes about $20 billion to the U.S. economy each year, according to researchers at the University of New Hampshire and Colorado State University. The bulk of that spending is at ski resorts.
Is there a risk actually to the value of your properties if you have a shorter ski season?
I think there could be.
Robert Katz is CEO of Vail Resorts, a publicly traded company. It operates 15 mountain resorts across the U.S., Canada, and Australia. It also owns luxury hotels and a real estate development company.
We do hear from shareholders quite a bit about, again, this weather variability. If I'm going to invest in Vail Resorts, how do I know that you can consistently derive results?
His answer: fight climate change from the ground up. Lead by example, and at the same time, protect the business.
Our sustainability practices are critical to our long-term sustainability as a company and the financial performance that we can deliver.
So it's really your bottom line.
Absolutely.
In 2017, Katz announced a commitment to using 100% renewable energy. That means solar panels and transitioning to more energy-efficient snowmaking. Yes, snow guns in Colorado. And it's buying more properties, recently in Vermont and Australia, a geographical weather hedge.
No, it's critical because what we're seeing is variability, which means every resort is not having the same weather at the same time.
The company's season lift pass is part of that too. It works at all Vail Resorts properties, but must be purchased before the season starts.
As ski seasons like this become shorter and less dependable, there is one business strategy that could help lower the risk for both resorts and residential real estate. That is turning this winter wonderland into a summer playground.
That means investing millions of dollars in zip lines and mountain coasters for summer tourists. And it appears to be working. Summer tax revenue in 2016 was 34% higher in Vail than 4 years before, according to the town of Vail.
It's critical. We think we need to be providing a terrific experience all year round.
For Nightly Business Report, I'm Diana Olick in Vail, Colorado.
To read more about the toll climate change is taking on the multi-billion-dollar winter sports industry, head to our website, nbr.com.
Before we go, one more look at the final day on Wall Street, the final numbers on Wall Street. They were pretty good, too. The Dow was up 216 points. NASDAQ climbed by 109. The S&P added 30 points.
And that is Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. We'll see you tomorrow.